All right, welcome to this video. My name is Taylor Bensrud, and I'm going to talk to you about the best way to profit more in your agency. And this is something I've been thinking about quite a lot recently. Now, any video I make, it's going to be something I'm thinking about more recently. But really important, it's going to be really short. 3 things: labor, tax, and pricing. These are 3 things you can use instantly to profit more. Now, I'm not talking about signing more clients. Obviously, that's a way that you can make more money. I'm just talking about, hey, if your existing revenue stream is $20, $30, $40, $50,000 a month, how can you, with your existing clients, profit more, okay? Now, it really, in my opinion, comes down to 3 major variables. There's labor, there's tax, and there's pricing. Now, there's obviously lots of other variables. There's more expenses other than labor, and there's more expenses other than tax. But in my opinion, labor and tax are the 2 biggest ones, and therefore that's why I have it on the board here. So the first one is labor. Now, you can drastically profit more if you increase the throughput of your service. By increasing the throughput of your service, it essentially means that someone needs less time to be able to service a client properly and deliver a great result, okay? So instead of taking 100 hours to get the client to where they want to be and keep them happy, it only takes 5 hours a month, okay? That'll drastically increase your overall profit because someone's maximum capacity, will be increased, right? So if you increase the throughput of your service delivery, your maximum capacity per account executive will be increased because, again, if they go from 10 hours to 2 hours per month to manage a client, they're going to be able to handle way more clients, which means that essentially your profit is definitely going to go up with the next client that you sign. The margins are drastically going to be increased. Or they'll be able to have more time to go towards something else, such as lead gen or whatever else that you want them to work on. Next thing, you can decrease team debt. Now, team debt is a no joke. I mean, if you've hired the wrong person, if you have onboarded the wrong person, if you don't have people that are at reliable independence, which is a stage where, this is somebody who is now independent and they are reliable. These are the 2 variables I'll look for with a new hire after 2 to 3 months. Hey, is this person reliable? And are they independent? Are they still, dependent on someone in the agency to be able to understand what is going on and how to do something? Or are they both reliable and independent? If you don't have the right person, if you don't have someone that is both reliable and independent, you're collecting large amounts of team debt. Now, this is something that's invisible. A lot of people don't see it, but it is fucking eating your profit margins, and it is a long-term thing. I mean, every single month that goes by, you're collecting massive amounts of debt, depending on how bad of a person you have hired or how poor performing that person may be in your agency. So this is a scary thing. You gotta be very, very careful about who you let into your agency, who you decide to hire, and how you onboard them. It's not just their responsibility to turn into a top performer. It is also your responsibility to be able to coach them properly and give them the training and the support that they need to be able to develop into somebody that is a reliable, independent, and hopefully a leader, a reliable, independent leader. So labor is very simple. Tax is another one, very simple and straightforward. I'm in Panama, I'm offshore. What's the tax down here? It's 0%. That's a fantastic thing to do, is to go offshore and basically have no tax. This isn't very viable for everybody, but depending on where you are, it is viable. If you don't know if it's something that'll make sense for you, hire a tax consultant, somebody that is brilliant with tax and basically reducing the amount of tax that you have to pay in your company. There is ways that you can get this number down, okay? If you're paying 30, 35% right now or whatever it is, 20, 25%, 50%, 60%. In France, they have insane tax percentages on businesses. It's like 50, 60%. If you're paying that much, hire a tax consultant. It's going to cost you a few $100. When I did this 4 years ago or 3 years ago, it was the guy charged $600, $750 an hour or something like that. The guy was like 70 years old. He'd studied tax his whole life and how to go offshore and the legalities of going offshore and making sure you do it properly. I hired him. We had literally a 10-minute phone call. And he told me, hey, this is how you can go offshore. This is the proper way to go about doing it. And because of that, we're profiting more, okay? We get to keep more revenue that is generated through our clients, which is extremely important if you're thinking about scaling your agency long term. Worst case scenario, if you're from America and you're dealing with the IRS, and I mean, it's hard to dodge them. you literally will still be able to pull away a lot of benefits from hiring a tax consultant. I mean, they're going to tell you a lot of different things that maybe your current accounting person or whoever it is that's filing your taxes and then it's going through that process and advising you on it doesn't know. If you hire somebody that's a specialist and really knows how to basically bring this number down. So the last thing is pricing. Now pricing, by the way, if you have questions about going offshore, feel free to swing me a comment below. I'm happy to answer any questions. Again, I'm located in Panama. This is Central America. It's different depending on what country you're from. I'm originally from Canada, so if you're from Canada and you have some questions specifically, hey, that's fine. If you're from somewhere else, I'm still happy to try to answer it. The next thing and the last thing is pricing. Now, pricing is the one that I've been thinking about a lot lately. Our agency delivers insane results to clients at a very ridiculously low price, in my opinion, for a lot of the clients. Not for all of them. For some of the clients, we have good pricing structures, but for a lot of them, we have too low of pricing. Okay, recently we worked with a company. We charged them $3,000 a month. We increased their monthly sales by it was like $600,000 per month. At like with I think like 10% profit on that, so it's like 60,000 profit. We charged them $3,000. Okay, we could have definitely charged them 15. So basically, charging way more just means, hey, negotiating better. Okay, when you're talking to a potential client and you're talking about pricing, get better negotiation skills. This is something that I'm trying to work on myself and that I'm thinking a lot about lately, just after seeing some crazy results. And we also had a client there was a client that was paying about $1,000 a month for a while, and we were on a percentage of ad rev. Recently, we crushed it in their account. We made them like $240,000, and we were getting 4% of ad revenue percentage. And so our retainer came out to like $14,000 for that month for this one client. And I was nervous to send the invoice because the average retainer had been like, $1,000 to $2,000. But then all of a sudden December comes and it's a very hot season for this client, and we made a lot of money for him, and he had no issue paying the invoice. I was kind of nervous sending it. I was talking to my team like, there might be an issue here. We sent it. It was paid in 48 hours. There was no issues. Okay, this was like a moment where I was like, oh shit, like there's clearly a lot of other clients where they would be happy to pay $8,000, $10,000, $12,000 for our service, but we just really screwed up the pricing, okay? So charge way more. You don't know your worth until you basically find a client who says, I think this is too much. If you pitch a client and they don't have any objections on your price, it's an indicator that you're pricing too low. I'm gonna say that one more time. If you say your price, if you say, yeah, you know what, we charge we charge like $8,000 a month for our service and 2% of ad revenue, that's what we do. And they say, okay, let's do it. You did not price your services high enough. It just means that you're undervaluing yourself. You should be stretching what you think is possible with your pricing because you don't know your value. The value is perceived value in the mind of the client. I can't formulate what my client thinks is valuable in terms of the time that we save them by managing their advertising. I don't know how valuable that is for him. He might pay somebody $8,000 a month for that if they're good, right? I don't know. And it's not something I can just ask him on the call, like, hey, what is this worth to you if we manage this? Because he also wants good results. It's not just about the time saving factor, it's also about the results that we deliver. So charge way more. Land performance-based deals. The more years that go, the longer, I've been in this agency world, the more I really believe in performance-based deal structures, because think about this. If you're running an ad agency like we are, the client has a business. The business is gonna scale. If you're on a flat retainer, it sucks. It literally looks like this. As the business scales, as the client's business scale, your retainer is gonna stay flat. It's gonna be right here at whatever it is. Let's just say it's like 2K per month. It's a terrible 2. And it is going to stay flat. And if you want to increase it because the client's business has increased, there's going to be some form of negotiation process, let's say right there, because you're saying, hey, Mr. Client, we started when you were just a little guy down here, and now we've scaled you a lot, and we really want to get a higher retainer. We think it's worth it. Now we want I don't know, let's just say 3K. It's a 50% increase. This kind of sucks. Honestly, it's flat. It's a retainer. It's limited to the amount that you're getting paid. Yes, it's a consistent amount. It's fine if you're starting out and you're starting an agency, but if you're doing $30,000, $40,000, $50,000 a month, you need to figure out how to get on a performance-based deal structure where you can bring in $15,000 for 1 month for one client just because it was a phenomenal performance. Now, doing this requires really good auditing process, really good negotiation skills, really good forecasting, which is auditing process. And again, it's not something you can really think about when you're day one starting your agency if you have no experience and you're really just getting your feet wet. But if you've been in the game for a couple years, if you know your shit and you're really an expert with your service, you know how to forecast the performance of the end result of what it's going to be if you were to deliver your service to a client. You can figure that out and you can forecast what the performance is going to be, and you can charge based on performance. I don't care if you're doing web design, okay? You can figure out a performance-based deal structure. You can obviously charge, you can do a hybrid model where you're doing a flat fee plus a percentage of ad revenue. This is what we've started to do over the last 6 months, and it's been revolutionary, and now I'm like, okay, this is amazing. Maybe if we just went straight ad revenue percentage, it'd be even better. So pricing, all right? Now just to recap one more time, this is a very short video. This is just about how to increase your profit with your existing clients. We're not talking about signing more clients. There's obviously a lot more things you could look at, but in your agency, labor is going to be the #1 expense. People is going to be your #1 expense and your #1 profit driver. Great people should pay themselves off in a matter of like 3 to 6 months, okay? I'm a firm believer that if you hire anyone, they should be paying themselves off in 3 to 6 months. It depends on the person, but if you feel like that person is really more of an expense than they are an asset, team debt, all right? This is not a good person for the team. It may be your fault because you didn't onboard them properly. It may be their fault because they're just not happy doing what they're doing, and really they're just showing up for a paycheck. That's the worst case scenario, all right? So think about these 3 things, especially tax. This one's here for life. It's around your ankle for life. So the sooner you figure this thing out, the more money you can save. I mean, it's insane. If you're doing $50,000 a month, if you're pulling in $600,000 a year and you're paying 22% tax on company, I mean, you just do the math right there. That's $100,000. That's 6 figures, okay? And if you're paying tax on your personal income, that's even more. So this one is huge. This one, you can get a little bit out of this one for sure. You can get a lot out of it if you got bad people. And this one you can get exponential amounts out of. So tax and pricing, in my opinion, are the 2 biggest variables you can focus on. Labor is also pretty big because team debt seems to creep up on a lot of people. And I wouldn't say there's anything else that I would like to put under this list. I mean, there's other stuff, like I said, but these 3, in my opinion, are the biggest for an agency, okay? If you're running an agency where you're providing a service, all right? With that being said, if you enjoyed this video, this one was pretty quick, pretty simple, not too in-depth, hit that subscribe button below. Thank you for watching this video. I hope you found some value. If you want help scaling your agency, there's a link in the description below. You can check out my site. You can book a call with me. We can hop on a call and talk about your agency more in depth. But worst case scenario, if you like these videos, hit that subscribe button. Thanks for watching. I'll see you next week on Monday. Ciao.